Welcome back to Power Lunch. We're just moments away from Fed Chair Powell's press conference. We often see the bigger moves based on what investors hear or don't hear from him versus just the decision itself, which we already have. Let's bring in Claudia Sahm, New Century Advisors chief economist, creator. Oh, we have the same kind of wardrobe vibes, too. Creator of the Sahm rule, the recession indicator. She was among the 3 members of our mock Fed panel who voted for a cut this month. I was just reading your latest missive, Ms. Sahm, and it's quite clear. You say cut. So what do you want to hear from the chair?
An explanation of why they didn't cut. Right? Like the case is there. The case is there on the inflation data, both the data in hand, some of the forward-looking inflation data. Right, we're at 2.5% PC inflation year over year, and to be calling this some further progress, right? So, like what is it they're looking for? I think the bar is getting set pretty high, and that really doesn't make a lot of sense. The Fed needs to start that process back gradually to normal, which means gradually reducing interest rates.
There are, as we've been debating this the past hour or so, there are viewers and Americans who are concerned and think this is all about appeasing Wall Street, and they're liquidity junkies and they just want lower rates, and it's self-interested and it's not in the interest of the average person. What would you say to that?
The Fed's mandate, the one they're given by law from Congress, is low inflation and low unemployment. And that is their focus. And that's, the tools they have. Interest rates aren't necessarily the perfect tool for that, but that's what they're aimed at. And that is what they have to focus on. And exactly how this affects markets it's important, but it is not the Fed's duty. And for Americans, having jobs and having stable prices, right, that's not appeasing Wall Street. That's like having, putting us on a good growth path. And then the Fed should be out of the way. They should not be big in the discussions about what's long-term growth, what's, the productivity. They're just trying to get us out of what has been a very rough 4 years, and then step aside and let the real economy get going.
If you were to ask Chair Powell the very sort of pungent question that I sense is on yours, what the hell are you waiting for? What do you think his answer would be?
More data. I understand the Fed. They have a very tough decision to make. And the rules of thumb that we often use in thinking about monetary policy, thinking about the economy, they don't make a lot of sense, right? You think back just 2 years ago in the summer, that was Powell's Jackson Hole speech, there will be pain, right? To get inflation down, it is likely there will be job losses and less growth. Fast forward 2 years. I mean, this has been hard at times. There has been no recession. There has been no widespread pain, and inflation came down a lot. So then what does that tell you in terms of what does it take to get that last mile? How important is it to pull back, start easing the interest rates? I get it, it's tough, but they've got to make a decision.
In the minute we have before he's likely to come out, though, what if the economy isn't as weak as we think it is? Having been bearish for the last 2 years, at some level, you have to acknowledge this immigration surge means that potentially that's the reason the unemployment rate's been going up. You've seen this whole debate going back and forth about it. GDP just came in better than expected last quarter. Jobless claims still look fine. Job openings rebounded last month. I don't know. Maybe we can handle rates higher than we think.
We didn't need a weak economy to get inflation down. We don't need a weak economy to get that last little bit out of inflation. So that's where we've got a lot of this growth of productivity, the labor supply, like all those places are in place. We do not have to be afraid of a good economy, right? If the inflation job is done or we're on that glide path, it's okay. Like the Fed can start stepping aside. It's not about them.